please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, 10 years ago, the month of September was a nightmare. Lehman Brothers filed for bankruptcy on September 15th, and thereafter, financial markets world over went into a tailspin. In the first part of our special series, Lehman 10 Years On, Latha Venkatesh caught up with the former RBI Governor Bimal Jalan. Here's an excerpt of that conversation.
Actually, I became sensitive to the impact of global factors on a domestic economy when I was ED in the IMF.
When you were ED in the IMF, that is 2002?
To 2003, I saw the suffering of Turkey, Argentina, Brazil, Mexico.
Okay.
So therefore, from then on, I felt that one of the most important things for emerging market economies is to be very conscious of the risks from the global economy.
Okay.
And this, after I joined as governor, somewhere around 2000, in a couple of years, I realized that our EMIS as a whole, there are global imbalances and they should be warned. So actually I gave a talk in Paris on the subject. So
in 2005?
2005.
Okay.
Banque de France.
Okay.
So the global imbalances and impact on emerging market economies.
Okay. Okay.
And then, so that's when I introduced the concept of national balance sheets. And now corporate sector, financial sector can be over-leveraged, and India and some of the emerging market economies are not. So one is the sensitivity. Second is a feeling of discomfort about what is happening. Even in 2005, it's a slight discomfort.
Okay.
And I think by 2006, again in September 2006, I said that there is excess liquidity, and I think the word I used is there a dark future or something like that.
A lot of acts were passed and banks were asked to reduce their prop book, in fact not trade on their prop book at all. Many of the derivatives were cancelled. Do you think the global financial system took enough steps?
As far as the global monetary system, it's a non-system.
Okay.
It is US dollar, US could print, and US dollar supply is determined by the US interest, but it affects the whole world. Has it changed? China is trying to question, but it's nowhere near replacing it as such at the moment. So therefore, substantively, as far as monetary system is concerned, it is more or less what it was before. More threatened than before, but squarely on the non-system continues. Second is the financial sector regulation. Now, as far as financial sector regulation is concerned, regulation continues to be national. Finance continues to be global.
Okay.
That dichotomy is continuing.
But that will never be resolved.
If that is not resolved, that will always undermine the policy space available for the countries. Secondly, the balance sheets of these large financial houses cut across nations.
Yes.
And to that extent, they can undermine the policies itself. Third, of course, is the finance is globalized, but capital is globalized, labor is not.
It gives the emerging economies like us a disadvantage.
And that's the second part. So where not much has happened, but the effect of this in terms of inequality is we have found expression and nationalism in the national politics. Third, the global financial architecture. The global financial architecture, has IMF changed much? Has World Bank changed much?
No.
Nothing. So what has changed? There are 2-3 things that have changed.
Which is?
The first thing that has changed is the euro is no longer as important for the global economy.
Yes. Finally, sir, do you smell a crisis round the corner? Because all global markets are doing well. Do you think they can continue like this, or do you think imbalance can hit?
You see, if the problems have not been solved of the last crisis, and we are still not clear what is the new normal, then how can we say what's happening is sustainable? So whether there is crisis or not, I think the quote-unquote, the recovery that we are seeing is a blip. And we should keep our fingers crossed.
All right, so keep fingers crossed is what Mr. Reddy says, but the street will be keeping its fingers crossed as far as Sun Pharma is concerned too, because the US FDA has issued 6 observations to the company's Halol facility. What does this mean for the company? Ekta is here to explain, Ekta.
Well, yes, just to go back, the Halol facility had received a warning letter from the US FTA in 2015. But in 2000, there were multiple inspections that had taken place post that, but they never got the clearance from the US FTA. Now, eventually, in 2018 Jan, they had received the go-ahead after they received 3 observations and inspection from the US FTA, and they eventually received an EIR as well as the first approval from that particular facility as well. Now, why exactly is this facility important is one, because it's an injectable plant. It comprises of around 50 new filings for Sun Pharma from this particular facility, and important other sort of products which are linked to Spark as well, such as Zelpros and Ellipsia. So now what has taken place is that just a few months after the company received an EIR, they had the US FTA re-inspect their facilities. Now remember that it is normal course of business for the US FTA to re-inspect a plant which they have already probably just re-inspected a couple of months ago, because it is linked to a product-specific inspection. They want to see that before we give approval to this particular product from this particular facility, whether or not the manufacturing process is correct or not. So this is likely to have been a PAI or a product-specific inspection. But during this inspection, things probably didn't go as much as Sun Pharma plan. So, for example, they were issued 6 observations in this particular inspection. Now, the observations are flashing on your screen. The initial preliminary kind of feedback that I've received with regards to the observations is that observation 1 and 2 seem to be more critical, because obviously it is an injectable facility. When the US FTA is questioning sterility of a plant, etc., that means that maybe you have some work to do in terms of remediation. What could happen? Approvals could probably get stalled until they complete the remediation. If things worsen and heighten, then maybe the facility could be classified as an OAI, which means that the US FTA will have to come re-inspect the facility and say it's okay now, and then only will they get new approvals going forward. So let's see. As of now, it's definitely a negative, and maybe it could be a negative read-through for other pharma stocks as well.
All right, negative read-through for other pharma stocks as well, the kind that outperformed in yesterday's session. But Aurobindo Pharma, that was the stock of yesterday. The management held an earnings call last evening. What were the highlights of that call, Ekta?
Well, interesting, because the management was quite positive, and they didn't really reveal much from what was already known. So, for example, they did mention that yes, the portfolio that they are acquiring is going to see some amount of price erosion. Eventually, they will look to reduce debt by FY 2021. They did mention that there were some analysts that had brought up debt as a particular issue, but they did say that eventually the plan is to reduce debt going forward. The company will also be entering into the authorized generic space with this acquisition, which obviously comes with higher margins generally. And the facilities have an excellent regulatory track record. Remember, 3 manufacturing facilities will be acquired along with this particular acquisition. So overall, I think the financial parameters are also something that the street was quite happy with. So let's, in fact, listen in to the big bull Rakesh Jhunjhunwala, who was also on the call and was quizzing the company's management.
Suppose certain part of the business has to be disinvested. How do you adjust the price?
I think that particular carved out entity you will have to evaluate in terms of like the portfolio as well as the various business aspects, and then we'll evaluate based on that. Is that right, Saman?
Yeah, if you're talking about the purchase price, so anything that's an income out of what we have acquired, that would be an adjustment for the purpose of purchase price allocation for tax purposes. One question is that if some part of the business is disinvested, how will you adjust the price consideration? So anything that we pay to make an acquisition, after that, post that, or during the course of acquisition, if we get any credits back, for example, like the one you said, would be adjusted in the purchase price internally. As far as the seller is concerned, it doesn't make a difference, but as far as we are concerned, we would make a purchase price adjustment to that extent, because to that extent, we are giving up the asset. Right, so how do you determine? It will be determined at the price at which it is disinvested. That means the seller is getting 900 million. Whatever is to be disinvested is on our account. Am I right? So typically what we would do is we would have a valuation firm, a third-party valuation firm determine some of these values. So it goes into a altogether different math, and then we determine the price based on certain cash flows that are likely to be generated and allocate the price.
All right, lenders of Reliance Naval have now filed an insolvency case against the company before the NCLT, or the National Company Law Tribunal. This even as the company has been given 10 days to revise its resolution proposal. Ritu Singh is here with all the details. Ritu?
That's right. The lead bank in the consortium, that is IDBI Bank, we understand from sources, has already filed an application at the NCLT to begin insolvency proceedings against Reliance Naval and Engineering. Remember, we had reported it is one of those companies that will be impacted by the Feb 12 circular, and given that no resolution was found within a 180-day timeline, RBI circular mandates banks to refer this company now to NCLT, which we understand has already been done. But that said, a one-time settlement offer, as we had reported, is on the table for lenders, which was presented to them. We understand that this one-time settlement offer includes repayment of about 1,000 crore rupees of the debt or upfront to the lenders. Another 1,350 crore rupees of guarantee will be absorbed by the promoters and transferred to another group company like Reliance Infra, and the remaining debt, according to this one-time settlement, will be converted into part equity and part cumulated redeemable preference shares. So this is the settlement offer that is currently on the table, but banks are not satisfied with it. They've given the promoters of Reliance Naval another 10 days to come up with a revised offer, which, if 90% of the consortium agrees to, even after the case is admitted into NCLT, they still have the option of taking it out of the NCLT and accepting this proposal if 90% of the Committee of Creditors votes in favor of this particular plan. So that is something, of course, that remains to be seen. But for now, the important development is that Reliance Naval and Engineering has been referred to the NCLT.
Okay, thanks Ritu for that. Well, global giant Tencent has invested in Indian gaming app Dream 11 Fantasy. Sources tell CNBC-TV18 the deal values Dream 11 at around $750 million. Dream 11 is a fantasy sports platform and has MS Dhoni as its brand ambassador. Here is the founder of Dream 11, Harsh Jain, on what the Tencent investment means for the company.
To see the world's largest gaming company invest in us is a big faith point driven home, right? For us, that we're on track to be India's largest game. Tencent is counting on the fact that we're able to reach our projections. And of course, their investment goes towards helping us do that goal. But it's a much longer strategic partnership that we're signing on for. So it's about the 5 years or 10 years ahead of us rather than just next year's targets.
Okay, let's pull up the Asian markets. Rather interesting, the moves out there. The key underperformer is the Nikkei, which has extended its cut beyond the 200 points downtick, almost 1% lower. But we're getting early rates from both Hang Seng as well as Shanghai. After yesterday's underperformance, they're seeing some bit of recovery, 1%, 1.2% gain on the Shanghai index, while the Hang Seng is moved higher by about 170 points too. The other indices are moving off the lows, so the Taiwanese as well as the Straits indices, which were lower by about 0.75%, are now sitting with cuts of just about 1/3%. So barring the Japanese index, all the other Asian markets are moving higher. The SGX Nifty, which earlier indicated a 15-point uptick, now has extended its gain to about a 25-point uptick. So let's see how that pans out. But individual stocks, all of them will be in focus. Bajaj Auto is one of them. They've announced that they will expand their three-wheeler and quadricycle capacity to 1 million units per year as the government has announced end to permits. Sonia is here with the details. Sonia, good news for them?
Well, yes, it's good news. Yesterday, Nitin Gadkari at the Siam convention said that there will be a no permit rule for all electric vehicles and automobiles that are powered by alternative fuels. So this no permit rule is a big positive for companies like Bajaj Auto. Bajaj Auto is the market leader with 86% market share in the alternate fuel three-wheelers. And after this announcement came through, Bajaj Auto went ahead and decided to expand their capacity, their three-wheeler and their quadricycle capacity by 25% to 1 million per year. Remember, earlier permits were released in states like Maharashtra, etc., and that helped them grow their domestic three-wheeler business. But now, since Nitin Gadkari has announced a no permit regulation, it is a big positive for Bajaj Auto. Of course, they have said the demand has surged quite a bit for three-wheelers over the past 12 months because of permits released in Maharashtra Maharashtra, Karnataka, Andhra Pradesh and Delhi. So in any case, the regulatory environment was very favorable for domestic three-wheelers. Domestic three-wheelers accounts for just about 10% of Bajaj Auto's business. So it is a positive. I mean, as far as 10% of their revenues are concerned and 18% of their EBITDA is concerned. Axis Cap has raised the target price on Bajaj Auto to 3473 versus 3233 earlier. They've also raised their three-wheeler growth estimates to 25% in FY20 versus 12% earlier. And they do say that this is very favorable for Bajaj Auto. Incremental volume upside is what they see going ahead.
Okay, thanks Sonia for that. Well, moving on, L&T Tech Services will also be in focus as the company's acquired Graphene Semiconductor Services. Rima is here with all the details. Rima.
Hi, Ekta. Good morning. Yes, they will be acquiring a semiconductor company called Graphene. The total payout for the deal is 93 crores, of which 70 crore will be paid upfront, and the remaining 23 crores will be via earnings payout as well as retention pay spread over 3 years. It's an all-cash deal. Now, if you look at the financials of Graphene, it's a startup, so the revenues is smaller, but the growth has been very good. So it's a 57% CAGR over the last 4 financial years. In FY18, the company had revenues of close to about 66.3 crores, and in FY15 its revenues were about 17 crore. Now the company has not given us the margins, but Axis Capital estimates the EBITDA to come in at 15%, which is largely in line with the company's margin, and a profit margin of about 10%. So the deal is valued at 1.4 times EV for sale, which they believe is quite reasonable, and it will be earnings accretive. Now about Graphene, it's a semiconductor services design as well as a consulting company. It provides end-to-end services. So one, it helps in chip design, in the embedded software, and then it also helps the manufacturer in the mass production. So it's an end-to-end solution provider, and this will help L&T Technology strengthen its footprint in semiconductor business. There is an opportunity for L&T Technology to cross-sell its services to the marquee clients of Graphene, because Graphene boasts of 10 of the world's top semiconductor companies, which are its clients. This acquisition will also help L&T Technology achieve its FY21 revenue target of $1 billion, which will be partly organic and partly on account of inorganic moves like Graphene. So all in all, it's a small acquisition, but appears to be a good one for L&T Tech.
All right, Rima, thanks a lot for that.
Well, we have Manisha Gupta joining in with an update on all the cues from the commodity and currency space. Manisha, morning.
Hi, and thank you so much for that. Well, the U.S. crude oil prices fell quite sharply in the New York session yesterday, but we have seen some buying come in on the lower side. It was a double data that the markets are really reacting to. On one side, you have the U.S. crude inventories, which have declined to the lowest since Feb 2015, and that is what is supporting the prices right now. But on the other side, the U.S. gasoline inventories gained quite sharply, and the markets weren't prepared for that. And that is the reason you saw that sharp decline yesterday. In any case, a bit of a premium also was because of the hurricane impact on Gulf of Mexico. That passed without any damage at all, and that premium also seems to be coming off into the markets. What would be important to watch today is the U.S. non-farm payroll data, and also the Eurozone GDP numbers for second quarter. That is what would give us direction further in sense of how the international markets really are coping with, especially on the trade war front. China also has come out with a statement warning of retaliation if new tariffs are slapped. Remember, it would be tonight, midnight, when the U.S. May or may not come out with the new list on tariffs, and this is expected to hit the retail consumer directly. So that is what really seems to be worrying the market. It's a similar scenario when you look at the metal prices also. The weakness in US dollar has been supportive. There has been some bargain buying as well. But it really has been about the global trade fear concern that seems to be weighing onto this sector as well.
All right, Manisha, thanks a lot for that. Let's move back to the cues coming in from the equities markets, the F&O space in particular, and that is very interesting given the sort of selling that we've seen from the FIIs in index futures. Remember, the FIIs continue to sell in index futures. In fact, yesterday we saw the Nifty September futures premium that was at 1.60 points has now halved to about 30 points. That's telling you there is relentless selling out there. Yesterday, after the Nifty moved higher by about 60 points, we saw FIIs sell about 1,155 crores in index futures. In fact, from the start of this series, on a daily basis, the FIIs on an average are adding 10 shorts per long contract in index futures, and because of that, yesterday the FIIs have totally turned net short in index futures. At the start of the series, they were 64% long, and now they're just 49% long. That means 51% short on index futures. So that is interesting, given if the markets sustain, there could be a case for short covering. At the lower end, the FIIs bought about 6,000 crores worth in index options, but suffice to say, those volumes were higher because yesterday was the Nifty Bank weekly options expiry. But over the last 5 trading sessions, the FIIs have been loading up on long puts, nearly 1.4 lakh puts added in the last 5 sessions, and this compares with just about 60,000 long calls. So protection being sought on the downside. 11,400 on the lower at the lower end is very important for 3 reasons. The first, the series low is at 11,394. Maximum open interest in terms of puts is at 11,400, and yesterday 11,500 puts saw some writing for a premium of 100 points. So the stop loss would come at around 11,400 too.
Okay, all right, Mangalam, thanks very much for that. And on that note, we're going to wrap up this edition of Power Breakfast. Stay tuned, Bazaar Morning Call up next.